Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook on Thursday, just the day before the NFP data out of the US. Of course, we saw in yesterday's session the ADP preliminary unemployment report, which showed on Wednesday, as I mentioned, that the private payrolls grew by 298,000. That was for last month, the largest since December 2015. The gain, of course, was well above the 190,000 jobs that were predicted. However, as it's been proven in the past, rather than the actual governmental report from the non-farm payrolls and, of course, unemployment rate, the ADP preliminary data was actually quite inaccurate in the past, as it's been proven. Therefore, we would prefer to see what would happen tomorrow in the NFP report. Meanwhile, however, please join me here in the chart. Let's have a look at the euro-dollar chart. It's declining. It actually declined yesterday from its 1.05556 area, which of course needs to be sustained in the near term to continue to the downside. Should it break below the 1.05 area in the future, which is also a key area of support. Not much to do there, of course. We just need to see whether it's going to confirm or not. Here, the British pound was also under pressure yesterday, also on the stronger dollar, as we saw on major commodities and currencies. It's already achieved one of our objectives in yesterday's trading. Right now it's aiming for our second and third. We're also going to stick with our bearish scenario for now. The Japanese yen, the dollar yen pair, of course, broke recently above the 114.60 key resistance area, so it should confirm above that with a closing of the day to see whether it's going to sustain further gains towards 115, 116. Looking at crude oil prices, the aggressiveness of yesterday's decline on the after the Energy Information Administration's crude oil stock data that actually showed 8.2 million barrels of build in stocks for last week. We saw, of course, crude prices, West Texas Intermediate plummet with about 5.4% in yesterday's trading. We can see that was a move with $2.2 to the downside towards the $50.20 a barrel area, which of course is very sensitive because we're getting very close to that pivot point of $50 a barrel. Not a pivot point, but a crucial point, which which of course OPEC and all non-OPEC producers are looking to sustain prices above that key area, as they're cutting output by 1.8 million barrels. This is for OPEC. Anyways, the aggressive move of yesterday's trading that we saw here in crude oil prices, we can expect some retracement towards the 50 exponential moving average. Of course, if that moving average remains intact, we can still see further downside towards the 50 area again. However, if that area is broken, then we could actually see even further downside towards key support areas like $49 and $48 a barrel as well. So for now, we're going to stick with the neutrality on this commodity. Simply because the aggressive move of yesterday could actually bring some aggressive retracement, at least 50%, which lies around the 51.40 area, which is also a key support resistance at this stage, where of course the price would meet with the 50 exponential as to be expected. Now, Let's have a look at gold prices. Also aggressive move yesterday, mostly on technical selling and of course pressure from a stronger US dollar. Gold prices have declined to extend towards the 1203 key support area. I'm saying key support area because the 1200 is not that strong support as the 1203 has been proven in the past, and also the 1198 is also a key support area on this trading instrument. We can see the trend is very beautiful, 45 degrees downtrend. Also on the daily chart, it's been confirmed that the short-term uptrend was broken after a few days ago. That was on Monday actually. The confirmation came on Tuesday, and on Wednesday, of course, we saw further downside with a closing of about $8, approximately $8 to the downside. Now, we're looking also for further decline on this commodity as well. Right now, all of our objectives were achieved in yesterday's trading. However, let's see whether the commodity will confirm below the 1203 area so we can add some more targets to the downside. Therefore, for now, we're just going to stick with the sidelines only to receive another technical confirmation from our technicals, and of course we will see whether the downside is to be expected in the near term. Also, very important news today. We're looking at the ECB interest rate decision, and of course later on throughout the day the policy statement and press conference. We're going to see Mario Draghi speaking later into the day. Also out of US, the weekly job data, speaking of continuing and initial jobless claims. Also import-export data. All of this is an inflationary data that the Federal Reserve is going to be looking at to reinforce the next week's possible interest rate hike on March 14-15 meeting. Now, tomorrow, of course, is the most important NFP data, but right now we are going to focus on the data of today, and tomorrow I'm going to talk to you again and, of course, keep you up to date with the fundamentals and technicals of the market of today. That's all about. See you tomorrow. Thank you for watching. Bye-bye.